This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on May the 3rd, 2013. Our time is 8:47 in the morning Mountain, 10:47 Eastern. Radio show runs News Talk 1010 in Toronto, 630 CHED Edmonton, also on News Talk 770 in Calgary. If you ever miss a radio show, the shows are archived on Harold's websites, hesradio.com and rarecoloreddiamonds.com. We have a podcast on iTunes. Go to iTunes. The show is portable. You can hear Harold's daily commentary on his websites or podcasted as well. The radio show is portable. Connect with Harold at rarecoloreddiamonds.com. Telephone number 1-800-432-1022. The company he recommends when it comes to investing in gold, silver, platinum, palladium, worldwide precious metals. Their website, www.pmc.com. Telephone number 1-866-623-2002 as we start today's show. Jobs numbers out in the United States. They had expected a gain of 140,000. They got 165. You would think they had found a cure for unemployment. It was absolutely absurd. The unemployment rate went to 7.5%. They still have participation rate of 1979 lows at 63%. Real jobless rates in the United States actually at 10%. It's a very low number. You actually need somewhere around 300 to 400,000 jobs per month to get back to where they were. They're just treading water. As well, Cyprus, the bail-in went ahead during the week. Those with accounts with more than 100,000 euros, they took a major haircut. Also, the EU dropped interest rates to a quarter point. And now they're actually even considering charging banks to deposit money overnight, if you can believe it. In the Eurozone, unemployment in Ireland, 14%. The Eurozone, 12%. In some of the other countries, the European Union, youth, and this is under 25 now, you have countries like Greece and Portugal, Ireland, the UK, Italy, Germany, France, Eurozone, and Spain. You have youth unemployment around 50-60%. In fact, they're talking 1 in 4 young persons unemployed in the EU. And yet we're being told everything is okay. The Fed left interest rates at a quarter point. They actually even talked about increasing quantitative easing. And in China, there's talk about the bird flu, which is a serious concern. In Saudi Arabia, there is a SARS-like virus that is a concern. And then on the gold and silver front, we continued this week with strong physical buying, wait lists, people paying premiums. In fact, the president of the CME, Terrence Duffy, said, and this was on Bloomberg, they don't want certificates. They want the real product. And he was talking about gold and silver. If you want the real product, if you want the real physical metal, speak with Worldwide Precious Metals, www.pmc.com. Telephone number 1-866-623-2002. Harold, this jobs report, when you basically are expecting 140, get 165, and the stock market is roaring ahead, to me, this is a time to be very, very cautious because I just think this is a recipe for disaster.
Well, it certainly is, Randy. And the fact is that if you look at the real unemployment in the United States, there's only 6 states that have unemployment under 10%. So how in the world is the rate at 7.5%? Again, you can play with the numbers all you want, but the bottom line is that, you know, the economy in the United States is stagnant and it's getting worse, and I just don't see the numbers that they're coming out with. Again, it's all an effort to get the stock market stronger, because the fact is that with what's happening with the banks and with the markets and everything, and as risky as everything at this point, I just don't see the economy going forward at this time. And if they do more quantitative easing, it's just going to add to the deficit type of thing. And we all know that the solution for for being in debt is not taking on more debt, and that's exactly not only what the U.S. is doing, but almost every country is doing at this point. Japan is in big trouble. They're reducing their currency down to almost nothing in order to bring on inflation. And everybody knows that that's going to happen. When you reduce the value of your dollar, eventually it's going to result in inflation because your dollar doesn't buy as much, and oil is imported, and oil is expensive and volatile. And as we're taping the show today, oil's up to $95. And the fact is that most people can't afford that. Inflation is definitely coming. These are the most confusing, upsetting, dangerous times that we've ever seen in the market because everybody seems to be desperate, and desperate times brings on desperate measures. So, again, nothing is going to surprise us at this particular point. But these are only short-term situations to what the long-term solution is going to be, and it has to be inflation. There's just no doubt about it. The other thing that you brought up, Randy, which is so true, is the physical buying of gold and silver. You know, Economics 101 says when the supplies are low and demand is high, prices will always go higher. But why does that not pertain to gold and silver? Because if people are lining up all over the world, and they are, we've seen the reports, we've seen the pictures, we've seen it all, that they're lining up to buy physical silver and physical gold, and there's very little available. People are lining up at times for days, and there's nothing available. How in the world does the price of gold and silver go down unless it's being manipulated? And that's what everybody believes at this particular point. You know, it really shocks me when you talk about the government. And in the case of gold and silver and commodities, you're talking about the Commodity Futures Trading Commission, which is the federal government. Their job is to police the futures industry. Their job is to look for things that aren't right. And how in the world do they sit back and watch gold drop $200 in 2 days and say, well, there's nothing wrong with that? I mean, those were the two biggest drops ever in the history of gold. And how does the Commodity Futures Trading Commission sit back and say, oh, that's normal, there's no reason to look into this any further? It's ridiculous. The Commodity Futures Trading Commission does not do their job. They're like the SEC, and they turn their head and they turn their back to things that are going on because they just don't want to deal with it. But the bottom line is that they're allowing these banks like J.P. Morgan and Goldman Sachs to manipulate the gold and silver market in the futures market by selling off heavy amounts of paper. But the bottom line is that how does that affect the cash market? The fact is that the cash price is affected by the futures markets. So when there's more buyers than sellers, the prices are supposed to go higher. When there's more sellers than buyers, the prices are supposed to go lower. What's happening at this point is you've got these major banks that have been short the market and forcing it lower. But what they've accomplished at this point was, number one, pushing the market to a ridiculously low level. On top of that, what they're also doing is they're making it almost impossible for them to get out of their positions because there's no buyers left in the market. So if they've brought the market down so heavily, and the people that trade the futures market, it's a very heavily leveraged market. It's extremely dangerous. And as the market keeps on falling and falling, it chases out more and more investors. So there's no buyers left in the market at this point here. The only ones in the market appear to be the banks that are short. So who's going to buy back these positions? I believe it's going to end up to be a situation that's going to jump up and bite them. It's a very, very concerning situation because, again, there's no policing in the futures markets at this point, and that's the job of the federal government. That's the job of the CFTC. But all in all, the good news is that this has happened before. In fact, if you go back to 1972, when the bull market in gold first started, you saw gold was basically trading at $100, and it rallied and it doubled in price and it went to $200. And then in 1976, I believe it was, the price of gold and silver fell to half. Gold went from $200 down to $100, and people thought that the whole move in gold was over, and that was it. They were trashing it in the marketplace, they were trashing it in the media, and saying that the move in gold was finished because it dropped by 50%. After they scared out all the traders that were in the market and all the speculators, then all of a sudden the market started to move back up again. And gold went from 100 to 2 to 4 to 6 to $850. we anticipate that the exact same thing is going to happen because the fundamentals that made gold move back 10, 11, 12, 13 years ago are still present in the market. In fact, in my opinion and many others, the reason for owning hard assets, gold and silver and diamonds and those type of assets, is stronger now than it was back 10, 11 years ago when we first started buying it. So there's no doubt in my mind that this market is going to go substantially higher. The thing is that you want to be able to stay in the market long enough in order for that to happen. Don't get disillusioned over this. These markets trade this way when governments are desperate. They were desperate back in the 70s, and they're desperate again. And there is no doubt that with weak currencies everywhere and high commodity prices, that we are going to have massive inflation. I'm still a big holder of gold and silver. I'm not a trader in the gold and silver markets. It means that I'm not buying and selling based on emotions and other people's opinions. I know what's happening in the market. I feel comfortable with the fact that I own the physical metal and I'm holding it personally. And the fact is that the market will eventually go higher. There's just so many things going on at this point that are so controversial and so concerning to most people. And in a lot of cases, one of the biggest things that we have to be concerned about is what's happening in the banking industry. We've been talking about what's happened with Cyprus, but the Cyprus situation is starting to move forward. And what happened this week, which was extremely concerning, is that the people that lost 60% of their deposit, 60% of their money, at least they thought that they were going to get back the other 40%, but they're not. They're getting back worthless shares, bank shares in the bank. Well, the bank is bankrupt. Who wants that? And this is what they're forced to do. What I think is happening in Cyprus, I think they're testing everybody. I think that this was a test to see how people were going to react to a bank in Cyprus going under and people losing their money. The fact is that it's happened. There's no rioting. People have almost accepted the fact that this is the norm. Well, if that happened in the United States or Canada, I can assure you that people would be lined up. There would be rioting. There would be rocks thrown through windows. There would be everything. People would go crazy if that happened. But it almost did happen. It happened in 2008. And if the FDIC didn't raise the insurance from $100,000 to $250,000, we would have had the exact same situation because there was a run on the bank. People were actually standing in line waiting to pull $4 trillion out of the banking system until the FDIC, the Federal Deposit Insurance Company, raised the insurance on independent bank accounts to $250,000. So that's what happened in the U.S. We came within a stone's throw of the same thing that just happened in Europe. And here's what the feeling is in the markets at this point. This is what Jim Seclair is saying, and this mirrors what a lot of people in the know are thinking at this point. You are a depositor in your bank. Then you know that you're lending your money to the bank with virtually no return. The most you're getting is 1 or 2% at this point. So the bank earns big money, and you get none of it, but assume all of the risk. If the bank goes broke because of their criminal activities, you lose your money. So in Europe, they lost all their money. They lost 60% of their deposit, and instead of giving the other 40% back in cash, they ended up with worthless bank stocks. And there's no way that those banks are going to get back on track. And again, I truly believe that this was a test to see how people were going to react to their money being stolen, and we're going to start to see this happening now throughout Europe and possibly into North America. Don't forget, there's $250,000 worth of insurance on a U.S. bank account. However, there's only $65 billion that the FDIC has in their reserves in order to insure these bank accounts. There's $10 trillion worth of bank deposits in the United States and $65 billion worth of insurance to cover it. Those numbers just don't add up. So when you get these conspiracy theorists that are saying at this point that the banks are going to steal all of our money and there's nothing that we can do about it, this is what the feeling is in the markets at this point, and it's causing a lot of sleepless nights. People are petrified. In Canada, we can keep $125,000 in a bank account. But if you got $500,000 sitting in the bank because you don't know where else to put it, and that bank goes under, you're only getting back $125,000. So how frightening is that? And this is happening in Europe, and they say that the same thing could easily happen here. So you've got to be smart about this, because we can't wake up in the morning and find out that the banks are closed, they've taken a bank holiday for 2 weeks, and all of a sudden we can't get to our money. There's got to be areas that you can put your money in, because when you put your money in the bank, and most of us keep the money in the bank just for safekeeping, because where do you put large amounts of money without putting it at risk? You don't want to put it in the stock market. You're going to lose it all. The commodity markets are very volatile. So we tend to put our money in what we always thought was a safe place to put our money, which was the bank. Now we know that it's not safe anymore, that the banks use our money, and if the bank goes under, we lose our money. And what are we getting in return? 1 or 2% interest. It makes absolutely no sense. So this is how frightening things are at this particular time. And again, what happened in Cyprus, in my opinion and many others, was just a test to see how people are going to respond when our money is stolen out of our bank accounts. And again, how do you fight City Hall? What do you do at that point? Do you hire a lawyer? There's going to be millions of people doing the same thing. It's going to be pandemonium, and you know yourself, when you can't get to your money, how stressful that is going to be. And on top of that, most people don't have $10,000 to their name. So you can imagine that if you couldn't get to your money for 2 or 3 weeks and your bills need to be paid and all that, how stressful of a situation that's going to be. Right now, what we're seeing in the markets is ridiculous volatility, and there's still short positions in the market. But as I had mentioned previously, there's no buyers in the market at this point. In the futures market, there's a lot of buyers buying physical gold and silver, but nobody trusts the futures markets anymore. And when the Commodity Futures Trading Commission just sits back and lets nothing happen and does absolutely nothing about this, they lose more credibility. And who in the world would want to put your money into a futures market or into any type of market where the odds are against you winning? The chances of winning in the futures market is 10%. 90% of the people lose their money. And now what they've done is they've beaten up gold and silver so severely, and they've turned their head and not done anything about it. But how about the small investor? How about the everyday hard-working guy, man and woman and family, that invested their money in gold for the right reason, and all of a sudden this happens to them? All I can say is that if you own physical gold and silver like we should, don't sell it at this time. Don't get emotional, and don't buy into what Wall Street is saying. There's no doubt that what's going to happen down the road. It may be another 3, 4, 5 years, but there's no doubt in my mind and many others that are much smarter that we're going to make new highs in the market, and we're going to see highs that nobody ever dreamed of before, and all that is still present in the market. As we're taping the show, gold opened up strong this morning. It was as high as 1483. As we're taping the show right now, it's at 1467. There's very heavy support in gold at 1350 and at 1250. If 1250 was broken, we could literally see 1,000 to 1,100 in gold, and I'm not ruling that out, but at this point here, we appear to be building a base that actually just may hold. Silver market, very similar. We're taping the show right now. We've seen a high of 24.52. We're at 24.19. We're still up 26 cents on the day. But you're seeing tremendous volatility in the futures markets in gold and silver. Again, it's very difficult to understand how there can be no physical gold or silver for sale, but the price of gold and silver is not skyrocketing. It just lends even more credence to the fact that the markets are being played with for the benefit of Wall Street, the banks, and the government. One other thing that was very suspicious is that when gold was getting ready to drop, but did not break 1520, Goldman Sachs came out 2 days before and said that the gold market was getting ready to plummet, and then 2 days later we saw it go from 1520 all the way down to below 1400. So what does that tell you? I mean, if that was not a fixed play, I don't know what is. But again, we're just going to sit back and we're going to let these markets come to us because, again, the trend is always your friend, and they can play with the market as much as they want, but there's no doubt that we're going to have massive inflation going forward, and that's going to be a result of weak currencies all over the world. Right now, you got platinum down $6 at $14.95. You got palladium down $5 at $6.94. You've got the Dow Jones, because of these bogus unemployment numbers, up 172. We broke 15,000 in the Dow. The Nasdaq's up 44 points at 3384. The Toronto Stock Exchange is up 152 at 12,531. The U.S. dollar is up one day, down the next, up one day, down the next. The U.S. dollar's down 28 cents at 81.96. And oil, it's been all over the place, but we're up $1.71, and we're at 95.70, almost $96 in crude. So again, the higher the crude oil market goes, it's going to bring on more inflation also. So again, Randy, I know that these are very confusing times. We did a seminar on Wednesday night. We had a huge amount of people that attended from all over the world, and it just goes to show and solidify in my mind how important of a topic that we're talking about and how concerned people are all over the world about what to do with their money. And again, to have as many people as we had attend this seminar, we had people that attended from Australia, from China, from all over Europe. And when you look at the time difference, people in Europe were up at 2 o'clock in the morning listening to our seminar. We had well over 150 people on the seminar. And again, we're the only company that does these live online seminars. We have this amazing platform. And again, it was just a really special night. And again, a lot of people got a tremendous amount out of it. But education right now is the most important thing, and keeping our wits about us, because, it's not... we get uneasy about this and we get emotional about it because, again, it's our hard-earned money. And when you invest your money and you think you're doing it in the right way, and all of a sudden things turn out the way that they are, it's extremely confusing for most. All I can say is that this has happened before. It happened in 1972. And in 1976, when the market hit $200 in gold, it fell to $100. People thought that the whole move was over, and then the market came back and made brand new highs and hit $850. And the same thing happened when silver hit 50. So again, Randy, I'm not happy with the way that the markets are trading at this point here, but I do see a light at the end of the tunnel. And again, I'm still extremely optimistic that we are going to still come out of this and do extremely well.
Well, as Eric Sprott from Sprott Asset Management put it, he said it's just pure insanity. When gold and silver got hit, gold traded about 120% of its annual production in one day in the paper market. We had offerings of 25% of the world's mine production at one time. And who the hell would have 25% of the world's mine production available for sale in a minute? And who would want to sell it in 1 minute? It's just ridiculous. But the truth of the matter is, when you own hard assets, you have something that has stood the test of time. Gold, silver, platinum, palladium, diamonds. You've got real wealth that you can hold in your hand, not a paper promise. As we talked about before, the CME president, Terrence Duffy, saying, they don't want certificates. They want the real product. And if you want the real thing, gold, silver, platinum, palladium, speak with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver, and start your own precious metals investment account today. We're hearing about wait times, people paying premiums. You don't have to worry about those things when it comes to investing with Worldwide. There are no wait times. There are no premiums. They have actually even reduced their fees to help you get involved in this market, to take advantage of it in the times that we're currently in. Get some money out of the banking system. Shift it out of savings accounts into physical hard assets like gold and silver. Connect with Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website, wwpmc.com. wwpmc.com. Telephone number, 1-866-623-2002. And whatever you do, get our free weekly newsletter this week. It is a must-read. If you're confused as to what is going on in the financial markets, get our newsletter from Worldwide, and it will explain everything along with our radio show. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial and diamond expert, Harold Siegel. We're taping this show at 9:12 in the morning Mountain, 11:12 Eastern. May the 3rd, 2013. If you ever miss a radio show, the shows are archived on Herald's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast as well. Go to iTunes, type in World Financial Report on radio. You can listen to archive shows. We are portable on your iPad, iPhone, iPod. Harold does daily market commentary. It's on his websites. It's also as well on the podcast. You can listen to us anywhere in the world. Harold recommends only one company when it comes to investing in precious metals, and that is Worldwide Precious Metals. We're hearing a lot about people waiting for physical metal, wait lists, premiums. Worldwide will cut through all that red tape and help you get the metal you want immediately. Speak with them right now, wwpmc.com, telephone number 1-866-623-2002, 1-866-623-2002, the website wwpmc.com. Harold's website for diamonds is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to connect with him personally and privately is 1-800-432-1022, and yet another very successful, as he mentioned earlier, online seminar on Wednesday night. I was watching it as I was doing a little bit of work on our weekly newsletter, and another fantastic hour of great information, and there was new information there as well. And the next time we have an auction, whether it be from hsfineauctions.com or seminar, we will let you know. Our featured diamond this week is a 0.51 carat round, brilliant cut, fancy, intense pink argyle. This is an absolutely stunning diamond. You can see it on the website, rarecoloreddiamonds.com. You can see it in our newsletter. There's a picture of it there. You click the link. It will take you to the website, and there's video of the diamond. It is absolutely stunning. And this week, I would say that you definitely want to get our newsletter from Harold, because we have lots of good information on diamonds. In fact, 2 videos, one from the Canadian Business Channel, Want to 20% Return, Buy Diamonds. Bloomberg, Bling Out Your Portfolio, How to Invest in Diamonds. They did a video as well. We have that. Bloomberg did a story. China has an affair with diamonds, and it's heating up the diamond market there. Story on Rio Tinto and the Argyle mine. Sotheby's Geneva, they have a sale coming up, and they're going to be featuring colored diamonds and those very rare diamonds that Harold talks about, the D Flawless. And we have that story as well from last week for those that might have missed it. There was a blue diamond that broke all sorts of records, and it sold at auction, and we have a picture of it along with the Hope Diamond. Get the newsletter from Harold this week. Connect with him, rarecoloreddiamonds.com. The telephone number is 1-800-432-1022, 1-800-432-1022. And Harold, one of the things that I liked about the seminar, you really took us through all the steps of this amazing market, how diamonds came about, how they actually are obviously cut and polished, what to look for, GIA reports, and you told us the whole story, and it's an amazing story to tell.
Well, thank you very much, Randy. Again, we had a huge response, so it just goes to show me that people all around the world are interested in alternative investments. In fact, we know that to be true. I went up to Toronto last week in order to do the Lang-O'Leary exchange, and that was all on alternative investments. And then this week, I was on a show called The Michael Dresser Show, a radio show, national show, and they wanted only to talk about alternative investments. So, again, it's an investment that's time has come. People are now starting to realize how severe the situation is, how the banks can take our money, how you can lose your money in stocks and commodities and everything, and how important it is to hold an asset close to you. You know, at this particular point, it's very difficult to make money. This isn't like the 90s where the stock markets were, and stocks were doubling and tripling and all the time, and when real estate you were making 20 or 30% in a year. Those days are no longer here anymore. Now it's put your money in the bank at 1 or 2%, and if you're lucky, your money is going to be there when you need it. You put your money into the markets, and the governments are allowing the markets to do whatever they want. It's just like the Old West at this point here. It's almost like everybody for themselves. But the thing about owning a diamond, and probably the most important thing right now, is to preserve your capital, to put it into something that you're not going to lose it. And where in the world do you do that? You put it into the bank, we know that the bank can steal your money. You put it in the stock market's at a level right now that it could plummet at any time. You put your money into the futures markets, whatever, 90% of the people lose at that. So where do you put money that is safe? If the most important thing right now is capital preservation, and then the second most important thing is capital appreciation, then you have to look at the diamond market, because certain diamonds that you can invest in never ever decline in value, ever. There's so few of them and they're so rare that the prices have always gone up. So if you're looking for capital preservation, to put some of your money into a safe asset that nobody knows that you own, that can't be manipulated, you got to look at the diamond market. And then for appreciation, there are certain diamonds that go up by 10, 15, 20%. There are certain diamonds that have the potential to go up 800 to 1,000%. So obviously there's still an area that you can make some serious money. And again, judging by all the shows that we've been doing lately and the response to our online seminar, where we had people from all over the world at all hours of the night checking in, it just goes to show that people are interested in a safe place to put their money. We want to look at the Argyle mine. The Argyle mine, again, produces 95% of the world's pink diamonds. Pink diamonds are in the news every single week, it appears. You know, last week, Randy talked about a pink diamond that sold for $39 million. $39 million, which is an unbelievable figure. But when you realize that it was purchased about 35 years ago for 35,000 pounds, at that point, the British pound was worth 2 to 1 to the U.S. dollar. So that diamond was purchased for $70,000, and it was actually sold for $39 million. How crazy is that? And the thing is that that's not an isolated incident. Every single week that there's an auction, similar situations are happening. Diamonds that are supposed to sell for 100 at auction are selling for 2, 3, and 400,000. Diamonds that are supposed to sell for 20,000 are selling for 100,000. And the reason for it is that people want assets that are going to be stable, that they're not going to lose their money, and that's the diamond market, the rare colored diamond market. We brought to you diamonds classes that nobody ever talked about before. We were always the leaders in this industry, and I always put my money up in the market before I even suggested this to clients, always wanting to make sure that this was the best investment to recommend. And now that times are the way that they are, as dangerous as the markets are, banks stealing our money, again, manipulation in the commodities markets, you need an asset like this. You don't put all of your money into it. You put maybe 20, 25%. You put away an asset that is safe, that you're going to be able to sell down the road and get all your money back and possibly a large profit. The Argyle mine produces about 200 carats a year of the most beautiful pink diamonds. 95% of all the pink diamonds in the world are under 0.20 carats. They're getting smaller and smaller, but they're very valuable. They're worth a fortune of money. It's the most concentrated form of wealth in the world. You can get involved in the pink diamond market for as little as $20,000, and it's very possible 10 years from now, when the mine is closed, that diamond's going to be worth 10 times that amount. A $20,000 diamond could easily be worth $100,000, $150,000, or $200,000 to you. But probably the most important thing is that if you spend $50,000 on a pink diamond, that diamond's going to be worth that amount a year, 2 years, 3 years later. It's never going to go down in value. Again, nobody can take it away from you. There's a lot of talk in the United States about confiscation of assets, and it's scaring the life out of people, because there was a new law passed in Illinois that allows the government to know who owns physical precious metals. People are thinking that it's for confiscation purposes and obviously for tax purposes. Nobody trusts the government anymore. So the thing is that you need to put away some assets that nobody knows that you own, that is safe, that you're not going to lose your money, and that's the diamond market. We recommend yellow flawless diamonds. They never decline in value. They go up by about 20% a year. They double every 5 years, and it's a great place to put money. They're very, very safe assets. And again, you can hold them on you. You can travel with them because you own them. When you cross a border, they ask you on the customs form if you're holding any cash above $10,000 or any type of financial instruments like stocks or bonds for over $10,000. There's never a mention of a hard asset like a diamond or something like that. And seeing that it's paid for already, you can take that diamond anywhere you go. You could start all over again if you need to. It's that type of asset. And we've made it even easier for our clients because what we've done is we've set up our auction businesses. We own our own international auction businesses, and by the end of this year, we will have offices in Central America through Panama, through London, England, through Dubai, and through Hong Kong. And the reason that we do that is our pursuit of high net worth individuals and other currencies. So when we sell our clients diamonds, our clients can not only make a profit on the diamond, but also on the currency. Don't forget, when you sell in Britain and you pick up British pounds, they're worth 40% more than the U.S. and Canadian dollars. So again, we've built all of this for our clients to be able to take advantage of a marketplace and to do very, very well. And that's what's happening in the market. We have clients that 5 years ago bought vivid Argyle pinks for $50,000. Now those same diamonds are worth $250,000, and within the next 10 years, they're going to be worth in the $2 million range. So what you want to do is you definitely want to get into the diamond market. You want to own some of these assets. It's probably never, ever been more important than it is right now. The featured diamond this week is a 51 point, which is just over half a carat, round, brilliant, fancy, intense pink Argyle. It's one of the rarest diamonds that you're ever going to find. In fact, about a month ago, Randy, do you remember that there was a 51-point, round, brilliant, fancy, vivid purplish pink non-Argyle? It was supposed to sell for $90,000. It sold for $338,000. This is the same size, the same shape. The only difference is, two differences, is that this is an intense instead of a vivid, and this is an Argyle instead of the one that sold last month, which was a non-Argyle, and still sold for 400% higher than what they anticipated at auction. That's how exciting the diamond market is getting at this point. Again, you put your money into the bank, you get 1 or 2%, and if the bank closes, you're going to lose your money. That is not a good deal. You're much better off keeping some money in the bank below the 125 insurance level and putting some money into a safe asset like a diamond. Then there's the deep flawless white market. It's a phenomenal market. It's going to skyrocket in price, and I know that because I'm involved heavily in the market with this fund out of Luxembourg, with the Swiss banker that is trading that fund, and the whole gambit. We're supplying all the diamonds for it, and we've also been hired to liquidate the fund through our international auction business when the time is right to do so. They anticipate this fund increasing conservatively by 10 to 20% a year. You can accomplish the exact same thing just by buying a deep flawless. There's no mystery to what this fund is going to do. There's no magic trading. They're buying deep, flawless, triple excellent white diamonds, and we're supplying them, and they're going to eat up the entire supply, and the prices are going to skyrocket. So now is an excellent time to get into that market. Now is an excellent time to get into the yellow flawless market, and again, the Argyle market. We just put $40 million in with Argyle to buy the next 2 years of production to make sure that we have the inventory for our clients to do well in this market. So, Randy, I've never been more excited about what's happening in the marketplace. And, you know, the longer you put these diamonds away for, the more and more they go up in value. We talked about the $39 million diamond that was originally purchased for 35,000 pounds, $70,000. Well, my wife's girlfriend, her grandmother bought a 5-carat fancy purplish pink diamond ring 50 years ago for $35,000. Now the diamond's worth $3.5 million. Almost every diamond that's going to auction is selling for fortunes. Last year there was a 262 vivid yellow marquee diamond that was supposed to sell for $180,000 and sold for $960,000. So again, let's be smart about this. There's a reason why we're being called to do radio and TV shows on alternative investments. It's because people are petrified to put their money into the Main Street marketplace. And again, the last place I would have money in at this point is in the paper asset market. It's being manipulated. It's being prices are being manipulated, as I just said, and banks are stealing your money. It's not a safe time to have your money sitting in the paper asset market. It's the physical gold, physical silver, and physical diamond market that's going to get you through these difficult times.
And I know that there are a lot of people who may have a different philosophy than we do, and we wish you well. If you honestly believe that money will never be taken out of your bank account, good luck to you. I personally think that now is a time to be very cautious and to hedge your bets. And we'll talk about that here in a second, because there is a bank official out of Europe saying that he believes there will be more bail-ins. And if you believe there won't be, well, we'll see how that works out for you. I wish you the best of luck. But we obviously have a very different philosophy. We're very concerned about the bail-ins, and never say never. It doesn't matter what country you live in. Our featured diamond this week is a 0.51 carat round, brilliant cut, fancy intense pink argyle. Speak with Harold about it at rarecoloreddiamonds.com. The telephone number 1-800-432-1022, 1-800-432-1022. Harold's son Jonathan sent me this week a report that came out at the beginning of the year from Nomura, and it's an exclusive report they did in a PDF format about diamonds. At the end of last year, I found another report from Bain & Company, and it's all about the diamond market. If you would like to see those reports, Harold will be happy to send them out to you. The Nomura report and the Bain & Company report, very extensive in the PDF file format. You can go through it, read through it, take a look at the charts, and you can see how bullish some of these investment houses are on diamonds. And now is a time to be very, very bullish. We have an auction coming up next week. We'll have auction results for you. But as I mentioned on a past show, we had that D-Flawless sell, and it was originally acquired in 2001 for $4.3 million. It sold for $14.2 million at auction, and that was Sotheby's New York Magnificent Jewel Sale. Harold touched on the pink diamond, originally sold in 1960 for $70,000 US. It sold this year at auction for $39 million. You can see the potential of this market. All you need to do, and if you'd like to see those auction results, Harold will be happy to send them out to you. Connect with him at rarecoloreddiamonds.com. The telephone number 1-800-432-1022. And Harold, I do want to talk about this confiscation, because there are people who do believe it won't happen again. There will be more wealth confiscation without a doubt. Savers and investors face further wealth confiscation in Europe as the continent struggles to resolve the single currency's problems. A bank chief has said European politicians will take the easy option of taking money from the rich rather than raising taxes and cutting spending to deal with the continent's debt problem. Lars Christensen, the head of Saxo Bank, asked if the raid on uninsured savings in Cyprus would be repeated. He told City AM there will be future bail-ins, loss of deposits, and other type of confiscation of wealth in the Eurozone without a doubt. There's no other realistic way forward if politicians continue to fail to deal with the basic indebtedness problem across Europe. There will either have to be an increase in taxes and cutting and spending, or politicians will take the easier route and take money from the rich. And personally, I don't think somebody with over $100,000 is rich. But I guess, in some of these countries where they're desperate, that's exactly how they see it. The Cyprus bail-in did go through this week. It was voted through in Cyprus's parliament. And to give you an idea exactly what happened, on Sunday, 37.5% of uninsured depositors were converted to equity as part of the island's $8.4 billion, that's pounds or 10 billion euros, rescue deal. The so-called bail-in forces savers to foot the bill for the recapitalization of Cyprus's biggest bank after it was hit by massive losses from its exposure to debt-crippled Greece. A lot of people are wondering, and we have this in our newsletter, why the heck was Cyprus buying Greek bonds? Why were they buying the junk? The Bank of Cyprus said it had converted 37.5% of deposits exceeding $100,000 into Class A shares, with an additional 22.5% held as a buffer for possible conversion in the future, and another 30% would be temporarily frozen and held as deposits. Now, I don't care what anyone says, but if I have money in the bank and they take it and they turn it into shares, or they're holding it, or they're confiscating it. They're stealing my money. That's how I personally see it. If you see it differently, that's your choice. But Harold, we've been told here in Canada now we don't have to worry. I hope that's the case. I hope it never happens to us. But the truth of the matter is, I still believe you need to have that insurance policy just in case it does happen, because let's face it, some of the things we've seen over the last 10 years runs on banks in the United States, in Europe, as in the case of the UK with Northern Rock. Anything is possible.
You bet, Randy. And how do you operate a business today when you can only keep safely $125,000 in the bank? Now, again, granted, the Canadian banks did not get into the same trouble that the U.S. and the other world banks, but it doesn't mean that they're absolved from possible losses and that type of thing from other banks that they've done business with. So, again, my strong suggestion would be, number one, never keep more than the insured amount in your account. So if you got $125,000 worth of insurance, don't keep more than $125 in the bank. And if you have to go to 5 different banks in which to do it, then you do it, because people tend to get complacent and they'll say, well, gee, everything seems to be fine. Our banks are not in bad shape here, and you put your $500,000 or your $750,000 into the bank, and then one day you wake up and you got the same situation as Cyprus. So again, it's a smart thing to be cautious at this point and just make sure that doesn't happen to you. Just keep less than $125,000 in each bank. And again, if you're in business, that's a different situation. In the U.S., in 2008, when they raised the insurance to $250,000, they had also said to certain corporations and charities and foundations and things that you can keep unlimited amounts of money in the bank. You're just not going to pay interest, and we'll insure that amount. Well, they absolved that at the beginning of 2013, and now all these corporations and charities and foundations and everybody had to scramble to find new banking relationships. So why in the world did they change that in 2013 when it was put in for the safety of businesses doing business? I find it very, very concerning to keep any large amounts of money in the bank at all. In fact, every night my bankers are know to put my money into T-bills so they're not left in the banking system over the night. That's how cautious I am.
Connect with Harold about diamonds. RareColoredDiamonds.com, his website. RareColoredDiamonds.com, his website. Telephone number 1-800-432-1022. Speak with him personally and privately about the diamond market. The company he recommends you use when it comes to investing in gold and silver, platinum, palladium is Worldwide Precious Metals. Obviously, we've been hearing about strong physical buying, wait lists, premiums. That is not the case for Worldwide. They have cut through the red tape. They can get you the precious metals you need immediately. They've reduced their fees to help you get the metal you want and start your own precious metals investment account today, because if you want to move some of your money out of the banking system, now is the time to do it. Get it into hard assets. And we should remind you that when you do start your own precious metals investment account, it's a liquid asset you can buy and sell with a phone call. Secure storage insured to the full value of your investment, 24/7 online access, and you will have a full-time representative helping you to profit and protect the money that you have. And we should mention that when you invest in precious metals through Worldwide, it is out of the banking system. Harold, I hope that the people that are very optimistic, and we have about 2 minutes left in our show here, are right. I personally don't want to have my money taken out of my bank account, but by the same token, I'm very, very skeptical of what's happening in the world today. You've talked about derivatives. All it would take is one derivatives blow up, and the truth of the matter is every bank in the whole world probably would be affected. And I'm sorry, what happened in Cyprus, in my opinion, they've stolen people's money. That's how I see it. If you have no control over your money and they're giving you worthless shares, they've stolen your money. And I personally think now is the time to protect yourself.
You're right, Randy. You couldn't have summed it up any better than that. They can play with the markets, they can play with the numbers, they can do whatever they want, but the bottom line is that we need to survive, and you need to be smart about it. Don't keep more than $125,000 in a bank account. own some assets like diamonds that you can put away that will hold its value and go up in value. But even if they just held their value, you're better off than keeping your money at risk in any other market. We love the diamond market, and you'll do extremely well with it. And definitely take advantage of this drop in the gold and silver prices because, again, it's almost identical to the 70s when the same thing happened and the market came back and made brand new highs.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Get we've had some amazing, over the last month, auction results. Get the auction results from Harold. Get those reports from Nomura and from Bain & Company. Read them over. See the potential of this diamond market. 1-800-432-1022. rarecoloreddiamonds.com, and ask Harold about the featured diamond of the week as well. Precious metals, now is the time to start your own precious metals investment account. Profit and protect the money you have. www.pmc.com. Telephone number 1-866-623-2002. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.